I think it does, but I would say we still have a lot of complacency in the market. I think around the world, investors have Brexit fatigue. And the result of that is that I actually think that they systematically underprice some of the risk that's actually built into it. If you look at other asset classes, we see much more significant movements. So real estate, we've already seen people who are really not interested in putting money to work in the UK. If we look in foreign exchange, you mentioned sterling, and yet we haven't seen that in the public markets. And that is, I think, a sign that the risk premium is too low right now for most of the public markets related to the UK.
Now, Prime Minister Theresa May is facing a challenge on multiple fronts. I mean, here in the UK, of course, passing this deal, which seems like a real struggle at this point, as you've just outlined, but also the parliamentary elections. I mean, how does that factor into where she puts her energy at this point? I mean, she has to preserve, as best she can, support for the Tory party. And so just go into a little bit more detail about how you think the parliamentary elections play into how things unfold in the UK.
Well, I think the reality is that most global investors have stopped trying to predict how the British elections are going to play out. And I think that they view that this has now become very much of an internal political issue within the Tory MPs. And so they've actually taken a step back and they've kind of said, we're going to wait and see how this plays out. We're not going to try to predict it. And that's where I think the complacencies come in, because I think that they have underestimated the tail risks of what could happen. And I think only now, as we view the potential change in government, that people are starting to say, okay, well, maybe some of this, the bad parts of this could actually happen. But that's quite recent.
Let's take it over to the continent and talk about Europe. And it was interesting what Sylvia, our correspondent in Brussels, was saying, that 30% of the votes are expected to go to the far right. So this is really a disruption when you talk about, traditionally the left, right in European parliaments. Those two major parties are not even expected to garner 50% of the seats this time around. What do you think that means for the future of Europe decision making, and that they will have to rely on a lot more consensus decisions? Probably makes the hurdle a lot higher to actually achieve things and get things done, coming at a time when obviously Eurozone economy is struggling.
I think it's an excellent point. I think most investors would say that the early returns from the polls would show that, quite honestly, decisions are not going to be made in many countries related to either fiscal or monetary policy. And as a result, they have become more bearish on growth in Europe. And I would say that's the single biggest issue on the minds of global investors. They see the US as slowing but doing fine. They see China had a little bit of a rough patch last year but appears to be on an upswing. And the biggest surprise for them has actually been how quickly Europe has slowed. And these kinds of results, should they happen, only make them, I think, a little more discouraged about the ability of governments to respond.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.